real business owner.
Whatever your situation is currently is not your forever situation.
That's really what real business owners is, man. Like, we don't care where you come from, where are you going?
Our goal and our job is to reduce the mistakes that you have to make or the money that you have to lose.
You want to be an entrepreneur, you want to be successful, don't give up.
You learn, adjust, and continue to move forward. Welcome back to the Real Business Owners Podcast. This is episode 98, I believe. Correct. Mm-hmm. Guys, it's myself, Trevor Calley, as always, Cal Goodman.
What's up?
Guys, today we have a guest for you. This is an individual that we've known probably for, 5 or 6, 7 years now, something like that, right?
It's been a minute.
It's been a while. We've done a little bit of business together, kind of here and there, just, seeing what type of synergies our businesses have together, all that good stuff. Guys, we're excited to have Curtis Nalley on the podcast. Welcome.
Thank you for the space, brother.
Yeah. We're excited to have you. This is a man that lives in Puerto Rico. So it's he's not close to home right now. He's definitely a long ways away from home. But those of you that don't know, Puerto Rico has some wonderful tax benefits. And so Curtis is taking full advantage of that scenario. They have a 4% flat tax. So, any individuals that are making halfway decent money, they're always trying to figure out how to save as much money as they can or keep as much money as they can that they make. And, there's quite a lot of businesses, just as before we went on, Curtis was telling us his neighborhood's, full of, people worth multi-millions, some billionaires down there. These people are obviously very smart, trying to keep as much money as they possibly can. So at least Curtis knows he's in good company and doing something right. Success leaves clues, right? Yeah. You got clues all over the neighborhood. So
your network is your net worth.
Yeah, exactly. So Curtis owns a company called Lending America. This is more of a non-traditional, funding company. Unfortunately, traditional banks aren't really lending to startups, right?
It's true.
You have to have at least a couple years tax returns. There's some stipulations that are involved to try to get an SBA loan. And how I like to put it is they like to give money to everybody who doesn't need it because they're already doing so well financially, right? The finances look so good that they want to give you money.
So true.
And when you're actually hurting a little bit, the stipulations kind of shoot over the top of you, and the people that actually need the money and can benefit from it don't really have access to this SBA type funding that traditional banks are working off of, right? Yep. How long have you been in the funding space? Let's start there.
So, running my own individual company, we're going on 6 years now.
Okay. So then we've known you for longer than that.
Yeah.
Because we knew you before you owned the company, right?
Yeah.
So it's probably 7 or 8 years, something like that.
Yeah, I started kind of in the space and understanding it probably 7.5 years ago.
Okay.
And that would have been around the same time that Cam introduced me to you.
Yeah, we had a few phone calls. We didn't know who each other was or anything like that. I was actually helping one of our buddies get a business going, and Curtis was working for one of my buddies, Cameron, up in Salt Lake. And Curtis was working for him. I think you were a sales rep up there at that time. And we had a very similar company, right? He was kind of trying to copy and paste what we were doing. And so me and Curtis would have phone calls and, hey, what do you do in this scenario? Or how do you pitch this or that? He was just trying to understand the space. And one thing that I loved about Curtis is that he was very, some people have ego, like they don't want to reach out and ask for help or consult with somebody that's already been doing it. But Curtis was, very open about, reaching out and saying, hey, what can I do to improve? What are you doing here? And it takes a lot of humility to do that, right? And ask for help or ask for more understanding or whatever it may be. And so I think that that's a good lesson just in general. If you're not the expert in your area, find someone that is an expert or knows more than you and reach out to him, send him a message, an email, a phone call, or whatever it was, right? And Curtis did a great job of doing that. Hence, he is now where he is, right? Yeah. And so he has the humility to ask for help because he's trying to understand an industry or understand a business well enough to be great at it. And then eventually when you're great at it, you can then peel off and kind of do your own thing, right? And that type of mentality is going to put you in a situation to be successful. Hence, you're doing well in business now, right?
So true.
And so... So you started in the space 7 or 8 years ago. You opened up your own business about 6 years ago, 6.5 years ago. Tell us a little bit about that startup phase, because that's a pain in the ass phase, right? Like,
Yeah.
I'm sure there was a lot of late nights, early mornings, stressors. Should I be doing this? Should I walk away? Should I go find a job?
Yeah.
Something a little bit more stable, because you're obviously on some unstable ground as a startup. So talk about that process for you and kind of your mentality around starting a business.
I went from understand when I spoke to you on the phone, Trev, I'd already been on the phone selling shit for 10, 12 years.
Yeah.
You know what I
knew
mean?
you had definitely sales experience for sure.
And I left an industry that I was getting paid like $350. I had a team of 15 guys, but it wasn't the best industry to be in, as you and I both know, right? So I wanted to take a shower from that industry, and luckily enough, I found what we do, right?
Yeah.
When I saw our product and people were saying you can fund a business at 0% interest, and I was like, that's crazy. I got to sell that.
Show me.
Yeah, I was like,
how?
show me.
Yeah, exactly.
So then once I learned the space, I was immediately committed. I was like, okay, this is the product.
This is what I'm going to do.
No matter what.
Yeah.
Because I mean, everybody in this room has sold a lot of things throughout our lives.
Of course.
Selling money has been the easiest thing I've ever sold, and also the most beneficial thing.
Yeah.
Well,
You know
what I mean?
everybody has the ability to win, right? Somebody's coming to you for money because there's a need.
Yes.
You access the money, you fill that need, and you get paid to fill that need. So it's kind of a win-win situation. It's something that you can feel good about, that you're actually benefiting the entrepreneurship community, right?
Yep.
And helping people's dreams come to reality through helping them get access to capital, right?
All that I knew is that if I had leads were blood flow, and that if I got on the phone with them, I could sell them a product.
Yeah.
And selling them money at 0% was easier than selling those products. You know what I mean?
Have you ever had people just be so skeptical that they just don't move forward with it? They're like, no, this is too good to be true.
I can do this on my own.
Yeah.
That's not true.
Yeah.
That doesn't exist every day.
Yeah, you've heard you've heard all of it over the last 6 years. So what's your rebuttal to something like that in terms of 0% interest?
Well, I'm very open with people. There's really only two ways that you can get 0% money. That's through either purchasing a car in some scenarios or getting a credit card.
Okay.
Now, the problem is most people are educated by guys like Dave Ramsey and many others to say credit cards are the devil.
Yeah, that's true.
And it's the exact opposite.
Exactly.
The perfect way to start a business for less than $100,000 is on a 0% credit card.
Yeah.
The basics facts are it's 0%, which you can't beat.
Yeah.
Number two, it's flexible and it will grow with your business if you use it properly. And number three, if you default on it, dude, they'll settle with you for 50 cents on the dollar in exchange for diving your credit score. You know what I mean?
Yeah, exactly. It's worth the risk.
Yeah. What product is better than that? I'll borrow that money 7 days a week and twice on Sunday.
Yeah.
Absolutely. How long does the 0% usually last nowadays?
We were getting like 21 months. Now the banks have kind of peeled back from coronavirus, and the best we're seeing right now is 20 months.
Well, that's still over almost 2 years, man.
Yeah. But we have a secret bank right now that is just every
Just pumping them
approval.
out.
Dude, $20,000 a piece, 20 months is 0% on balance transfers and purchases. It's they're my best friends.
Yeah. So just to kind of frame this up for you guys listening, so initially I said non-traditional funding, right? We can't go to the local banks and get a 10-year term at 2% interest or 3% or whatever it is. It's just not going to happen, especially for startups. Now, if you're an existing business, that's an option, but you're still going to go through a lot of headaches, right? You're going to have to go through a lot of financial statements, bringing them tax returns, bringing in you have to be kind of ran through the ringer in order to finally get access to money. And it could be a 3-month process. It could be a 6-month process. It could be drawn out a little bit depending on what the underwriter needs, right? So even if it's something that you have the availability to go try to access, there's still other ways to access money that could be quicker and could be cheaper in the long run, right?
So true.
And so non-traditional funding, what we're talking about when we're talking about 0% interest rate, I mean, we're flat out just talking about credit cards, accessing lines of credit. And that's why he was talking about, you got guys like Dave Ramsey or, these financial guys who say credit's bad. And the reason why they say that is because they understand the normal person's mentality.
It's true.
The average person's mentality has access to capital, they use it. Right?
To buy consumer crap.
Correct. So it's not necessarily that it's bad. It's people make bad choices with them. Yep. Right? The cards don't just grow legs and walk off and go make a purchase without the individual, consciously going there and making a bad purchase. Right? That's buying something that they can't necessarily afford because they want to look cool or whatever this scenario is, whether it's Christmas or, and then you're paying high interest rate throughout the year to pay off your Christmas and you're kind of stuck in this cycle. But again, if you're getting access to money and you're using it in the right way and leveraging it where you have the ability to have your money make money so that the money's paying for itself, that's really the idea here. And so can cards be bad? Yes, if the individual is bad with finances. Okay.
So true.
If the individual's good with finances and using it properly, you can leverage it and be able to make money, right?
Yep.
And so startups that don't have access to money go to an individual like Curtis and say, hey, I need $50,000 to start my business. Curtis takes a look at their credit report, takes a look at a few items, nothing crazy or nothing scary. It's all quick, right? Me and Kel, we played in this space for probably 8 years, 9 years, 10 years, something like that. We were doing business funding stuff for about a decade or so. We pivoted away from it, but that's how we met Curtis, right?
Yep.
And Curtis is doing it, and he's doing it at a high level and doing it very, very well. But somebody needs $50,000 to start their business, their plumbing company, or whatever the business is. It doesn't necessarily matter the industry. That's obviously up to you and what you're trying to accomplish. What he'll do is he understands specific banks that he can go through that can give you the highest limit possible at the 0% interest rate that we were just talking about. And so the idea is, yes, it does cost money to get access to money because Curtis has employees. He has, overhead. He's got marketing. He's got, all of these things that he has to cover. But at the end of the day, that 0% pretty much covers the cost or the fee in order for you to get access to money. Because if you got a loan at 5% or 10% that was a personal loan over the course of that 2 years, that interest that you're paying on that is ultimately the same as a fee that you would pay after you receive funding. And again, it's not really an upfront fee. They pay once funded, correct?
Yeah.
Okay.
I mean, when you really study startups, and startups are the biggest passion I've ever had in my existence, man.
Yeah.
You find out that, first off,
but that's also why you're doing well at it.
Yeah, it's true.
Right.
100%,
Yeah.
man. People go into business borrowing money from their family members or a bank at 20 to 30% when their margins are 20%.
Yeah.
That's insanity, man.
Mm-hmm.
Or they go out and they're like, well, credit cards are a good idea, but they don't know anything about credit cards. Because I'm here to tell everybody listening, I don't care if you have an 850, you do not know about applying for credit cards.
Yeah.
I promise you.
There's a whole back end process that the banks go through, that these credit reporting agencies go through when they're pulling your credit. You need to know which banks are pulling from which bureaus.
At what time.
Yep.
And where they're soft pulling
because
from.
You might listen to this and say, well, I can just go apply for credit cards myself. Sure, you can, but if you apply for too many credit cards too fast, they can all get declined because they can see all of the other applications based upon your inquiries. You need to understand, maybe these banks check Experian, these ones check Equifax, these ones check TransUnion. So if I applied for 2 or 3 cards here, 2 or 3 cards here, 2 or 3 cards here, I'm spreading it out to where they don't really see how many applications that are out there. And so you can leverage yourself by having the information necessary to get access to the most money possible, right? That's true. And then also get the highest limit possible, because you may apply and get a $5,000 limit. Curtis may apply and get a $15,000 limit, right? So, don't shoot yourself in the foot and go crazy with it. But maybe if somebody only needs $5 or $10,000, sure, go apply for 1 or 2 credit cards, by yourself and have access to a little bit of capital, right?
We're designed for those kind of mid-tier businesses, guys that need 30, 50, 100K.
Yeah.
And
what's the most you've ever funded somebody? Not saying it's typical, right?
Yeah,
this is why it's the most.
Like
right?
the most, my Babe Ruth was like 423.
$423,000.
$3,000. Yeah, but that was like funding a unicorn. You know what I mean?
Yeah.
The guy had an Amex Black card.
Yeah, most of you listening, you're not a unicorn. You don't have an Amex Black card. So
Exactly.
You're probably not going to get $400,000. But what would you say? Let's say, for instance, somebody has currently $5,000 to $10,000 limits on their credit cards. They have, a 650 to 750 credit score. And they have 2 or 3 credit cards to their name. On average, would you say, 50 to 100 is something that maybe they should expect?
$42,000 is our average for every client that we fund.
42,000 by the time you factor in how many clients you have, all that.
Yeah.
And you run the numbers, 40. So you could expect potentially 40 to 50,000 based upon the average. Some people can get up to 100, 150. Some people might only get 20 or 30, just depending on the scenario. So what are some of the things that people should be looking at, in terms of their personal situation or their personal credit score that might put them in a situation to be successful at getting access to capital with you?
The best thing that I could tell anybody is credit is really not about all the time having all your negatives gone.
Yeah.
It's really about the relationship to banks and the limit on cards, the length that you have on cards, how many term loans you have. So what I really try to tell people is I'm a big believer in credit optimization, in which we train banks. Like if we get a Discover card or an American Express, they're going to give us a $2,000, $3,000, $4,000, $5,000 limit. What I'm going to do is I'm going to run and churn money through it like it's my job. And what happens is they expand my limit to 20 to 30K. Then they're going to start requesting income documentation. And that's when I'm like, because I'm a business owner and all my stuff's in Puerto Rico, I'm just like, whatever, move on to the next card.
Yeah.
So therefore, I build all my limits out to like $30,000, $50,000, $60,000 limits. So then the banks know that I can handle money, which in my opinion is much more important than churning points, because most people, like in our business careers, we're churning points because we need bigger numbers, right? But I love churning 0% because it's free money times 2, in my opinion. I mean, if I get a loan at 3%, I feel it's free money to fight inflation, right?
Yeah.
But if it's at 0%, it's how I don't feel a way you can lose in that scenario.
Absolutely, man.
Unless somebody's obviously not
unless
handling it right?
Exactly.
It's up to the end user. So
if you should only be my dad taught me a very valuable lesson. You only borrow money to make more of it. Like he said, you never borrow money to be comfortable and live in a house. You never borrow money to be comfortable and drive a car unless those things are paying you.
That's what I like about you, man, because I bump into you all the time, everywhere we go, whether it's conferences, whether it's some dude that I'm chasing his business or I do business with him. He's asking me for a referral on funding. I'm like, oh, Curtis, I already work with Curtis. And, they're looking for, whatever, more resources. And I'm like, man, Curtis is everywhere, man. I run into your name all over the place. But and I follow you online too, dude. And I see you always jumping on there and just educating people about leverage because it is so powerful. People don't really understand it, and I know you do a lot more than just the credit card stuff too. You've got many buckets of funding as well. But that's true. But dude, everywhere we go, like some of the same masterminds we're in, I mean, people are like, oh, Curtis knows leverage, man. I need to pick his brains some more. And so you bring a lot of value there. But what are some other areas besides the credit card route? I mean, it's awesome because you get those 0% cards for 20 months, but what other areas do you have? I know you do some bridge funding stuff, everything.
So a long time ago, we found a problem in our space, and that was a whole bunch of people were coming to us with way too much credit card debt already.
Yeah.
And I was like, okay, why are banks not lending to these people? So back in like 2016, I lent a lady like $3,000 to pay down her credit cards. And then I got her $25,000 at 0%. And I charged her a ridiculous interest rate because I knew nothing about giving loans, man. Yeah. You know what I mean?
You're like, I'll give you 3, give me 6 back.
Exactly.
She's like, cool. And like, okay, that worked. Now what do I do? Like,
exactly, right?
You're just kind of experimenting, right?
It's true. And this lady pays me back, and she's super stoked about it.
Yeah.
And now I own a company where I loan, on average, about $750,000 to $1 million a month of my own capital.
Right.
And it pays down people's cards so they can live the American dream of building their first business. You know what I mean?
Yeah.
And that's really that's where I love this space because there's so few people that are in our industry doing what we're doing that it feels like I'm still on like the horizon of it. Yeah. And we're still at such a low market cap because no one knows about our industry. Yeah. That's why I don't believe in this whole competition thing. Like we need more competition so we can all scream at the top of our lungs so everybody knows what we do. About the industry,
that there is non-traditional funding that exists.
Exactly.
Right? The reason why you guys just don't know about it is because the traditional banks, you know, they're only doing SBA type stuff, right? And traditional banks have billions and billions of dollars, so you only know what's common to the average person, right?
It's true.
And so that's the whole reason why we wanted to have Curtis on, is to educate you guys that there are other options that are available. But as Kel was talking about, in terms of other things, so Curtis was talking about a bridge loan. Let's say, for instance, you've got $10,000 limit on a credit card and you have a $6,000 balance. Your debt to credit ratio needs to be what, like 30% or below?
Well, it's really, typically it's about 30%. Yeah. But it's really about, understand guys, don't always pay off your credit cards to zero. Leave 5 to 7%. It will give you a boost on your credit.
Gotcha.
And same thing, there's degrees. Once you hit 30%, you get a notch down on your scoring model. Once you hit 45%, you get another notch. Okay. 75%, another notch. Over 100%, big notch, right? So it's really about the mixture of credit. And what we try to do is help educate the public on being like, yo, just because you got 7 cards that are paid off, but you got one that's a $20,000 limit and you put all your money on it because it's 0% and your credit score looks pretty, that doesn't look good to the banks. Yeah. Because the banks know what you're doing. The banks are like, okay, he's just coming to me to get more 0% because he's not going to pay me anything, right? So I have to educate our client base on how to adjust that to the right levels, which usually is 35%. Sometimes it's 30, sometimes it's 22, sometimes it's 45.
Give or take, right? Yeah. So let's say 25 to 35%. So if you have a $10,000 limit, $6,000 balance, Curtis would come to you and say, hey, cool news. You know, we got you a $50,000 approval. We think we can get you access to this money, but you have to pay down that card $3,000 so that you can get to that 30% debt to credit ratio and get the balance down to $3,000 on that $10,000 limit.
Yep.
Let's say you don't have access to that money. You say, well, I don't have $3,000. I'm coming to you for money, you know, which is what the average person says. And you're like, oh, great. Well, you know.
Here you go.
Let me educate you on this other product or service that I make available to you. And so what Curtis could do is he borrows that individual that $3,000, pays down that card, and it makes that $50,000 now available to you. And then when you get access to the capital, you're paying him back on what's called a bridge loan. Yep. And that's really what he's talking about in this scenario. But Kel was talking about, are you mainly just doing credit cards right now? Or are you doing any like merchant cash advances? Are you doing any lines of credit, maybe micro lines of credit? What's the deal in terms of alternative outside of credit cards?
We do a lot of merchant cash advances, term loans, business lines of credit. But not nearly as much as we do as our main product base.
Low-hanging fruit, right?
Exactly.
The credit card, I mean, we can.
It's just the bonus.
Yeah, you can get them access to capital quicker. It's the least path of resistance, and most of the time when people are probably coming, and it's cheaper. And most of the time people coming to you, they're like, I need money yesterday.
Exactly, right?
You know, what's taking so long? And it's like a week into it, and you're like, calm down.
Oftentimes what we like doing is like for business owners that are already set up, we're like, hey, we're going to get you an MCA, which is kind of like dealing with a vampire.
Right.
But if we have an exit strategy that's at 0%, it's really not that bad. Yeah. So oftentimes we'll come in.
That's the bridge in that scenario.
Exactly, right? A guy's
take the higher interest rate money in order to float you to get to the point where you can get access to the credit card stacking. Right?
Exactly. Yeah. And we've done that a lot in the MCA market space. Yeah. And it's mainly because like we're really niche down to startups all the time. But we oftentimes, just because, I mean, my social presence and other things of that nature, we always have business owners that have been in business for 5 years and are making monthly income, but they've never built business credit. They've never taken care of their own personal credit because they've just been hustling their whole life. You know what I mean? So we'll take those guys, we'll send them to an MCA partner of ours. Oftentimes Toro, shout out to all those guys over there, love them.
Yeah, what up, Toro?
Yeah.
What's up, Cam?
Yeah, man.
Yeah.
And it's been great because that's gotten me into a lot of other businesses. I mean, just doing bridge loans in our space, it's crazy. I work with all my competitors on a daily basis. You know?
Yeah, they need access to money to pay down the cards just so that they can help people get money too. So they go to Curtis for money.
Yeah,
to pay down the cards, right?
It's a beautiful, beautiful place.
Well, that's just a lesson just in general. Like, don't make enemies, make friends, even if they're your competitors, right?
Yeah.
We've done business with other people that own accounting firms, right? And so we could serve each other. We might get in a pinch and we can reach out to them. In this case, they got in a pinch and they reached out to us and said, hey, can you help with this? We're just a little overwhelmed. And then we come in and help. And you can ultimately have somebody that's in your corner in your industry. And there's plenty of money in the world, right?
Amen.
Like you don't need all of it in your bank account to live a good life. Like, so work with your competitors. Don't work against them. You know, have friendly fire, so to speak. Not, don't create enemies.
Be allies, man.
Yeah, exactly.
I mean,
that's the word I was looking for.
In the last 45 days, we had a banking issue where a mid froze some of our money.
Yeah.
Shout out to all the people dealing with that in their lives.
Yeah.
We've been down that road.
Yeah, I think everybody who runs a business that does crazy stuff like we do and collects large amounts over the phone is gonna run into those problems. And when I did, I mean, my competitors were the guys that lent me money. You know what I mean?
Yeah.
Like that, and most people would be like, that's so foreign to them. Why would a competitor ever give you money? And it's just because, look, you have to understand market cap and everything that you do. Right. You know what I mean? And there is no way that me or 10 other dudes could handle all of the business. Every business owner in the U.S. Come on. Right. Yeah. You know what I mean? Yeah. Not possible.
Absolutely.
No, I agree with that. I mean, one of our business partners went through this process of credit card stacking when we hit hard times. Mm-hmm. It wasn't necessarily for business funding, though, right? Mm-hmm. Income dipped in 2012.
Yeah. I can't remember why he needed it. Just to consolidate some shit short term?
That's what it was, right? Yeah. Like, basically sold his truck and bought a, older Toyota Camry. But he had some other loans that he had out that were like 15 or 16% interest. So he was trying to consolidate his monthly bills, right? Mm-hmm. Like paying a high interest rate on this payment on this loan, high interest payment on this loan. He went and got $110,000 with a company doing exactly what Curtis is doing, non-traditional funding through credit card stacking. Got $110,000. Yeah. He consolidated some of his loans to the 0%, so he's not paying the 16% on two different loans, and paid off some other stuff so that he only had this 0% to worry about. Very minimal payments. That's the one thing that I used to pitch when we did it. I'm like, the cool thing is with a credit card, there's a minimum payment, and in business as a startup, cash is king initially, right? Like you're strapped for capital because it's all being deployed, and any money that comes in, that money's probably going to go back out and be deployed again so that you can continue to build momentum as an entrepreneur. And I said, so the cool thing is if it is slow for the first 3 months or 6 months, you don't have this large monthly set payment that you have to make each month. If you need to, not advising it, but if needed, you could pay some minimum payments for a few months, very, very little going out where your capital is still being deployed in your business. And then as your business starts getting some traction, the revenue starts coming in, then you could start, chunking that away a little more aggressively than just the minimum payments, right?
He used stacking as his own little bridge loan.
That's what he did. That's exactly what he did, right? And said, if I'm paying, let's say, $4,000 a month on all of these different loans, let's get access to capital. Let's consolidate it where I'm only paying $2,000, and you're saving a couple grand a month during hard times. But as our income increased, swiped it away, and it got all paid off, right? And so it doesn't necessarily have to be to start a business. I mean, if somebody's just wanting access to capital to consolidate maybe some other loans that you have or whatever it is, it could be used for just about anything if you need access to money, right?
I always tell people the velocity of capital is very important thing to understand, right?
Yeah.
Because the faster that we can move money and we can get it back with some type of return, the better for us, right?
Yeah, of course.
So oftentimes all we use credit for is an accelerant in business, or in often cases as a debt consolidation mechanism. So
or a survival mechanism.
Exactly,
I guess,
right?
Because we went 66 grand in credit card debt in 2012 just to keep a business afloat, right? And so without having access to, I think it was an Amex, like an unlimited Amex or something like that. Without having access to that, the business wouldn't have been there.
Exactly. Right. And you don't regret that decision today, right?
No,
well, that's the thing, man.
Yeah, exactly. Yeah. Look around this office. It ain't too bad.
That was the best $66,000 ever spent on a credit card.
Yeah, man.
Dude, you gotta have money to get in the game. You know what I mean? And there's a lot of guys. I'm like you, dude. I'm passionate about startups. I love startups. We have accounting packages for startups. We've got them for more existing business owners. We're just like you in the more of the accounting space. But like, dude, and I've told this story on the podcast a long time ago. But like, dude, when I was just a sales guy before I even owned a company, I wanted to invest so bad, but I didn't have any money to get in the game. I literally used a credit card to put $500 earnest money down on a condo up in Sports Village. Finally got approved for my loan, right? But I didn't even have $500 to go buy this condo, but I needed the earnest money, right? So I put it on I wrote out a check from Capital One or whatever it was, Chase, like balance transfer check, gave it to the guy. Here's my earnest money, dude. Before you know it, though, dude, I got my loan, got approved because I had it, the income, all that shit. Dude, I own that property. I did it in like 2002 or 3, something
That's when they were giving money out to everybody,
Yeah. But still, I flipped that thing in 2 years, ended up almost double. Because right before real estate boom, and when we're going through real estate booms, like people want to get in the game, but
it's true.
They don't have the capital.
That's one of the most important things about the versatility of our product, right?
Yeah.
If you're a consumer that works at a good job and you're making like 80, 100 grand a year, you need to invest, right? Yeah. But oftentimes you're like, hey man, I got 5 kids. I've got a wife. I've got a big house with a big mortgage. I've got 2 cars. So oftentimes you can use, like I've seen guys take credit cards, put it into crypto and blow up. Yeah. Like make more money than I make. I've seen guys that put 100 grand into some random cryptocurrency
and have it blow up,
and now they're my neighbors in Puerto Rico and they have $10 million because they put $100 into 100 grand into Chainlink. You know what I mean? And that's what's important to understand, right? They weren't going into that blindly. No one just risks 100 G's when they don't have it on something that they don't know about, right?
Yeah.
And right now, the opportunity, whether it be in real estate, whether it be in crypto, whether it be in new businesses, there's an abundance of money in this world. And often cases, if we have access to capital ourselves, we can practice the importance of leverage, right? Especially when, the economy, we pumped in 33%.
Of the money in circulation.
And they're trying to tell me inflation's at 2%. Come on, guys, I have a calculator. Right?
I love hearing, especially during political seasons, like, they campaign, they fight over all this money, the deficit, the, national debt. And I'm like,
but they all give it out.
It doesn't fucking matter.
It's so true, man.
They all give it out.
Dude,
anyways.
It's not backed by anything anyway anymore. It's all just printed, dude. Doesn't matter what country, doesn't matter what, anything, dude. It's like,
we're an X amount fake.
What are they going to do? Go to war with America?
It's true. Lesson number 1 in economics, man. How do you get a country out of a debt? You inflate the monetary system because inflation erodes debt, guys. So that's why there's massive opportunity in borrowing leverage right now.
Right.
If we're saving money, we are losing the game. We all know this.
Inflation's increasing faster than
way
faster. Bank is paying you in interest to hold your money.
But if we're getting loans on properties at 2%, and they're carried by cash flow, we're getting a free property. Inflation is eroding our debt, and we get tax benefits, and you don't even have to live in Puerto Rico to do that. You know what I mean?
Yeah.
But and if the dollar does go to shit one day,
I'd rather have a piece of real estate.
You need assets. Yeah. You need assets, but in order to have assets, you need to make some damn money. And
it's true.
And if you can borrow money to make money right now, like, do it. Get in the damn game. So you can accumulate assets no matter what happens. You got assets, you're set, dude. Like, it's true. If the dollar goes to shit, but I've got all these badass properties around the world. But now it's Bitcoin that we got to do it. Like, I'm gonna sell that shit for Bitcoin.
Exactly.
Man. It's just, it is what it is, dude. Assets is what helps.
I used a credit card to pay off a 20% interest car one time.
Yeah.
Why not?
I did.
Exactly.
So I ran it through a merchant account.
Yeah.
Yep.
Oh, that's right.
Remember that?
I do remember that.
Back at not the old office, but the old office.
Mm-hmm.
I was so upside down in the car. I think I sold it for like 13 and I owed like 18 on it or something like that. And I didn't have access to the money, but I was trying to get out of, and sell it, but I can't sell it unless I cover the difference, right?
Yep.
And so I was like, or I can just keep the car and keep paying 20% interest because I bought it with terrible credit when I came off of drugs, right? Yeah. So they really got me on that one, boy. $550 a month.
Yeah.
I paid on that for a few years. I bought it for $21,000, paid on it for a few years, and still owed 18. I was like, I paid like
what's going on here?
Yeah, exactly. I paid like $11,000 over the course, and I paid down $3,000 of the principal.
There's no light at the end of the tunnel.
Yeah, there was no light. So I was like, so that's what gave me the idea. I'm like, if I process like $5,000 or $6,000 on a credit card and just cut a check to myself or whatever. In that case, I didn't own the business. Kel did. So I was like, Kel, dude, we got to process this credit card. Bro.
I've actually done that a couple times.
He said, we could do it minus the 3%. Because the merchant fee or whatever.
Exactly.
I'm like, that's fine. I'm paying 20 up in this bitch. So 3 sounds much better. But then I was able to pay that portion down and then get rid of that car. And so you just saw that I paid $7,000 or $8,000 in interest over the 2 years. That at a 0%. I can chunk away that much quicker. And so that's what I did. And it kind of bailed me out of a situation. And the only reason why we're kind of sharing all these little war stories of ours with credit cards, Kel buying a rental property that ultimately doubled his money.
Yeah. Well, I ended up using that credit card to restore the carpet and the furniture and all that shit, because I was also, so after I got the loan, got it done, I still didn't have any money. I just got a loan, right? Yeah. And so I was like, fuck, it was a vacation rental. And so I was like, I gotta put some furniture in this bitch, Yeah. So I had to use, a few $1,000 on that too, And then started cash flowing though. And then, dude, the market just kept booming. Dude, I ended up selling it in 2006.
Good.
So I bought it in 2004, sold in 2006. Everything crashed the next year, 2007, right? And so I remember just being like,
thank God I sold that.
Yeah, man.
Yeah, got out of that one.
Yeah, because I bought that thing for like 60 or 70 grand, sold it for like 130, almost double my money.
In
Not
2
my
years.
money, almost double bank's money, right?
Yeah.
And then
that's the power of other people's money.
It's so true.
Cal didn't have, first off, it wasn't his money that bought the property. That was a bank loan. Yeah. And then he used a credit card loan to put down the down payment and then used a credit card to furnish it. Yeah. That ultimately turned into him making $70,000 on a piece of property,
free property
within 2 years.
Pretty much.
Right? And so I hate the concept when people can't wrap their mind around. Again, these are all scenarios where we leveraged credit to put ourselves in a better financial situation long term. Okay, that's what people can't really wrap their minds around, because the only thing that they think about as a average or normal person is consuming, not investing, right? And so that's why they have a tough time saying credit is good or having access to capital is good. Yes, with the right minds, absolutely it's good. Kel made money, but he's an individual with an entrepreneur type mindset or an opportunist mindset where he's like, I see an opportunity here. I need to take advantage of it, right? And that's really what we're talking about.
Great episode for our following, because we don't got a bunch of average ass people listening to this.
No,
they're all
these are all
entrepreneurial.
people
They're
that
risk takers.
They're all wanting to do something better than their current situation. But I think this is going to be super educational to help them maybe think of a new route or an alternative route that maybe they didn't know about or think about, that they now would have access to, so that they can make whatever dream that they have come to reality, because it takes money to turn a thought into reality. That's just the truth of it, right?
We've built an ecosystem. I mean, like, we partnered with a law firm to solve that problem, so our customers don't have to use their own mids to get cash. Okay.
Gotcha.
We have a law firm that escrows funds and does things legally for people, so they're protected in a way that you do that. And it makes a beautiful process, right? Because we can take the lines of credit, we can put 80% into our business, and we can take 20% and put it in our bank account, so that way we can survive, right?
Yeah.
Because a lot of like when I started, man, I had $32 and a crap ton of credit card debt, man. And I dialed like a savage, paid it all off, and now I'm living in Puerto Rico, and I could retire if I solely choose, right? And I'm only 35 years old.
Yeah.
crazy life do I live? You know.
So I want you guys to understand, as we're talking about credit cards, he can show you how to tap into cash off of those cards. So that's really what he was just talking about when he's talking about being able to process it and turn credit into cash, similar to what I did with Kel when I was wanting to pay off that car.
Exactly.
Right? Kel was my banker.
Yeah.
If you charge back, I'll kill you.
Yeah. He's going to cut me a check. I charge back. He's like, hey, show me the contract.
Show me the contract,
I don't have a contract.
I never received anything from
I
this.
have no goods or services. You know, or whatever. When
So
the charge
true.
back, Kel pays off my $6,000 gap between the car. But again, some of you guys might be thinking, well, some of the things that I need to do, I need access to cash to do that. And all you guys are talking about is credit and credit. Curtis will show you how to turn credit into cash. So the things that you can't utilize for credit, you have access to the capital to where you can deploy that, right? There's going to be some things, equipment or whatever, that you can pay for via credit card. There's plenty of invoices that we pay as daily entrepreneurs that we pay on credit cards, but sometimes you're going to need to cut a fat check, right?
It's true.
You're going to need money in the bank account. And so he'll show you how to leverage the $50,000 that you have available to you, maybe turn 30 of it into cash, and you still have access to 20 in credit, and you can use that credit wherever you could use it, but you still have access to cash to deploy in whatever area that you want, like cryptocurrency,
Exactly.
for example.
Yeah.
And I wouldn't say necessarily to do that, but hey, YOLO. Right?
Yeah,
You only live once, motherfucker. So,
Exactly.
you know, your good credit ain't making you money right now, so you might as well leverage it to see if you can put yourself in a better situation.
It actually brings up another question I have for you is the business credit side of things, because there's so much bullshit around business credit, right? And we know how
So
it's been
much
sold,
bullshit.
right?
Yeah.
And I know that there's educational stuff out there, but like, dude, I have business credit. Through some of my entities, I actually went and bought some cars on my credit without me even personally guaranteeing.
Yeah,
But that didn't happen overnight.
Yeah.
That took me 10 freaking years to get to that point, if not longer. And so I try and tell people, because I get hit with this all the time, like, dude, can I just, get business credit and go get a loan? Like, are there some shortcuts to doing it fast? Because
Of course.
I couldn't do that until I had some really solid financials, some history. I did do trade lines and stuff like that, through one of my personal entities. But dude, it took a really long ass time, So you talked a little bit about business credit, so maybe educate a little bit on that.
So this goes back to whenever I work with a startup, I try to give them what's called a 24-month plan.
Right.
And that works out to be first round is on personal credit cards because they don't have a business.
Yeah.
Then they build a Paydex and an IntelliScore. Those are versions of what business credit is.
Yeah, it's almost like Experian or Equifax or TransUnion.
Exactly.
It's just the bureaus that are giving you business credit, right?
It's just those terms that they call it.
Yeah.
Right.
And once you do that, like you go to Uline, you spend a little bit of money, it reports. You go then to Staples and you get your Staples card, right?
Pretty much.
Play the game.
Exactly. But the problem is there's so little information out there, which is why our company has built products around this, right?
Yeah.
So therefore, when a client comes to us, we get them personal first, we get them business card second, so now we can get 3 years of 0%, not just 2,
Right.
And then it bridges the 24-month gap, because the problem with most banks, we'll take Chase as a great example here. Chase's requirements for what are considered non-recourse based loans, and I say this it's a loan based upon your EIN, not your personal social security number.
Right.
To get one of those from Chase, you have to be in business for 24 months. You need to be doing over $3 million per year in revenue, and you have to have a 740 or better credit score and an 85 or better Paydex score. So if you understand,
80 is considered good, right?
yes, 80 is considered good.
Again, this is another scenario where they want to give money to people who don't need it.
Exactly. So what we do is we develop a game plan, right? Everything that you do in business should have an exit strategy. I build businesses to sell them, even though I don't plan on selling them. I build everything that I do. If I borrow money, I know how I'm going to pay it off before I ever even borrowed it, right? If I leverage a property, I know that my exit is here, right? Like
I know I'm going to rent it and then sell it in 5 or 10 years
Exactly.
at the right market or where I'm going to buy it to hold it because I want a whole portfolio. I want 100 doors and
or refinance it, leverage it for another property.
Yeah, exactly.
Exactly.
Everybody goes into it with an idea of what they want when they do it, right?
But so many people go into it blindly and they're just like, hey, I'm gonna build this business. Well, we should be building businesses with plans, right? Same thing when we borrow money. Look, some businesses don't work out. According to the SBA, 62% fail within the first.
Is it 3 years or 5?
3 years, I think.
I think it's either 3 or 5.
Yeah.
I've seen that statistic.
And that comes from people. Well, the SBA says it's because they don't have enough money, which I tend to agree because I loan money.
Well, I think I just mentioned this on a podcast recently.
Yeah. Underfunded.
The average business that let's say that's 63% or whatever it is that go out of business within the first 3 years. If they had access to an additional, it was like $5,000 or $10,000, it would have kept them open.
Yeah.
Just like us having access to a credit card to where we can go $66,000 deep, kept us open to where we could make the proper shifts and pivots in the business in order to make it profitable again.
Yep.
Right? So every business that goes out of business, there's that little window. If they had 10 more grand or 20 more grand or 30 more grand, it would have kept them open and potentially made them thrive in 2 years, 3 years, 5 years. So
pandemic is a perfect example of
Yeah,
this, right?
Yeah.
How many businesses actually went down because their taxes weren't put together and they couldn't get a PPP loan, right? If they could have used lines of credit short term to get around that hump, right? They could be in 1,000% better situation today, right?
It's true. We actually had quite a few people reach out to us like, dude, I need to file like 5 years of back taxes. I don't know where all my books are. It's a total
Exactly,
mess.
right?
But I got to get one of these PPP loans.
I need it by
and
next
we're like,
week.
dude,
Exactly.
we'll have to charge you like 15 grand to put all that time into that and all the
Exactly.
manpower. Like we build them a quote, they can't do it.
Exactly.
But if they had a little bit of capital available to them, they could have probably paid us to do it. We could have got
and then
them.
they
know
could have
this
got
company-
50 grand in PPP money
I
that
know
was
this
forgiven.
company called Lending America.
Yeah.
They can solve that problem.
I've heard some decent things about them.
I know, man.
You know, Hey, somebody's over here just patting himself on. Yeah, patting himself on that. Did I say Lending America? Lending America, America. Make sure let's dive it into their subconscious so that
It's
that's
true.
the only thing they think about for the next 2
It's so
days.
true.
They're like, Lending America, what's that?
I want some of that 0% money. It's much better than PPP
When you're
money.
proud of the shit you build, though, you should be able to do shameless plug. You know what I mean?
exactly.
Hey, man.
Exactly. You know, that's what you're talking about. Singing it from the mountaintops, letting people understand that they have options that they didn't even know about, right? And that's really what the podcast is really all about, is educating people, you know, whether it's in business, whether it's building teams, whether it's, you know, no matter what it is. And this is just another piece. So we definitely appreciate you coming on and sharing the information that you've shared with our listeners today. And let me ask you this, where would somebody go to reach out to you if they wanted to connect with you via the podcast?
Yeah, go to lendingamerica.com, www.lendingamericallc.com.
World Wide Web.
Yep, the World Wide Web.
It's on the web.
And
For anybody that's 65 and older, it's on the web.
And you're going to see an application form that's going to have you pull your credit. It's going to have a thing at the very top says referral service provider. Please put in real business owners.
Real business owners. Hey, just full transparency, we're going to get a little bit of a kickback just so that you guys all know, you know, this is the first, you know, kickback that we're receiving. You know, usually we're very generous and just trying to give you guys good information, which we want, you know, you guys to get good information. But, you know, again, yes, we will be getting a kickback. So put fucking real business owners in the referral.
We're not trying to sell you guys anything, but
I'm not going to sell you anything, but go do it now.
Go buy some money from Curtis.
Yeah,
Exactly, right? That's how business is done.
Yeah,
and
exactly.
I mean, I've known you guys for a lot of years.
Yeah.
I have nothing but respect for you guys. I mean, dude, I've had many conversations with you, Trev, where just you've changed my life, man. Because we all need those people in our life that give us little reminders, and that's what's beautiful about you guys building what you've built. Man. You guys run an accounting firm, but you have this amazing podcast. You do amazing content. Like, It's just awesome watching people grow.
Do you want people to follow your Facebook and stuff, or are you kind of picky, only friends and stuff? Because I see your lives, dude, and I like learning shit, so I'll pop on and listen to your lives quite a bit.
He does a good job. He does a great job.
Shares
on
good
the
information all the time, but I don't want to like tell people to go follow you there if you're like, that's my personal shit. You know?
Feel free. People can add me, Curtis Nalley. I do get like, I'm really picky about my Facebook because I get like, I don't know, 200 requests a day, like most people in here. And I try to balance it out around 3,500 people. But I mean, if you're engaging and you really want to learn about credit, I'm here to tell you there is nobody that knows my subject matter better than me. Yeah. Because
nobody that openly discusses it on Facebook Lives and things like that in terms of just trying to give good information. Why? Because then you'll be top of mind when there's a need for that individual, right?
It's not, I've never once in any of my Facebook Lives had a call to action to try to get money from people.
It's just being genuine and authentic, giving information. That's really what we see when we see Curtis on Facebook. So, dude, we appreciate you coming out and being on the show, dude. It was a good one. I really enjoyed this one. You're always fun to chat with, though. So I always enjoy any of the conversations that we have. So, guys, if you got value out of today's podcast, make sure that you're sharing it with somebody because this one can be a difference maker. This one could be the difference maker in terms of whether somebody is in business or is not in business. If they have an existing company that might be struggling, this could be the difference maker of somebody that has an idea in their head or an idea on a napkin that they haven't done anything with because they have no idea how. I need investors. Where's investors? No, you don't need investors. You know, utilize what you have available to you and make it work. You have access to credit through Curtis and Lending America. So if it's something that you need, great. No pressure, but this is definitely an educational podcast where you understand what's available to you. So when the need arises, you could reach out to the proper party and get that gap filled in and put yourself in a better situation financially. So
even if you're just a guy who needs money to pay $15,000 to get accounting done, right?
Yeah.
Or if you're a guy who has a bunch of customers that are trying to pay you $30,000, right? Yeah. There's so many versatile things that this product can handle, and thank you guys so much for the opportunity to share it with the world, man.
Absolutely.
Glad we finally got to connect, man.
Yeah, man.
Since you moved away to
Is this the first time you've been to our office?
Yeah, man.
Okay, cool.
Like
we'll
100%.
have to give you a full tour here when we get off the show. So, guys, do all the cool shit like rate, review, share it. That's how we get it out there. We don't run ads on the podcast or anything like that because we want to keep it, authentic. We want to keep it genuine. We didn't really necessarily start a podcast to make a bunch of money. Started a podcast to try to give good information. Your guys' payment to us would be helping us grow the show. That's really what it comes down to. So we're leaning on you to share this information with somebody that would get value from it. So other than that, guys, take care. Have a kick-ass day.